Shell share coming off its worst levels, but we have seen pressure continuing in these markets at this stage, and it really seems to be all about Ireland at this stage and debt problems there.
Correct, Stephen. And the markets have been weighed down by two concerns. Obviously, the debt issues out of Ireland, as you had mentioned, and the increasing concern out of China and it's reaching its inflation target of 5%. We saw inflation coming in at 4.4%, and considering China considering monetary tightening policies in terms of raising their interest rates going forward. So those two factors really weighing on the markets. We have the other issue that has come out with the whole Ireland debt issue has been the news that Austria was going to withhold its aid from Greece, really heightening the Ireland issue that we're seeing in terms of sovereign debt. They however have come out to say that they'll be releasing aid to them in December. And what we've seen through the morning, not really in terms of a resolution on the debt issue. We've seen a slight turnaround in the markets. We've recovered almost 200 points, and we're seeing some positive data coming out of the EU. We saw the jobless numbers coming out slightly better than expected, and as even when we spoke earlier, we were saying that at this particular moment, investors could be looking around for an opportunity to buy.
Well, when we chatted last week, Yolanda, you were chatting about a switch really from industrials and financials into resources stocks. Now, we have seen commodity prices coming off quite sharply over the past few days. Resources stocks now under pressure. Is that play still on? Is that play off at this stage?
I see. We think that play is still in. In terms of what we're seeing in the market at the moment is definitely an excuse to take profit off the table. We've seen commodities run very hard over the last 2 weeks, and really in terms of the banking sector and in the industrial sector, investors are quite cautious in terms of growth in that sector, so we're still seeing that play in terms of resources.
Well, just looking at gold price, for instance, last week trading at $1,424 an ounce, this week trading around $1,340. Do you think it's just profit taking on the gold price as well? Because you would have expected the gold price to have moved higher due to the debt problems in Europe.
Correct, Stephen. Gold has run very hard. It has hit resistance, and now just an excuse for investors to take profit off the table, and really waiting to see what gets resolved out of Ireland before taking possibly further profits or an investment stance going forward.
What's our volumes looking like at this point, Yolanda? Are sellers selling with conviction?
Stephen, volume's still fairly low. We have seen volumes drum off over the last couple of weeks. Investors still taking positions in the morning, looking for data out in the afternoon, not really looking long term, but looking for those intraday movements. With anything new coming out of Ireland in terms of finalisation, it really does move the market quite violently. So investors really just coming in the morning. We see 2.5 billion traded this morning, then fairly quiet, and then obviously this afternoon we've got news out of the States in terms of housing starts and building permits. That will give investors an opportunity to either cut their positions and then wait until the next day.
Of course, we had retail sales numbers out here this morning coming in a little bit better than expected, because 6.1% growth, well ahead of consensus of 4.7%. And I think Nedbank was halfway in between at about 5.5% growth. So a pretty good number for retail sales.
Correct, Stephen, and we saw that coming off the results from the Foschini Group yesterday, where they saw their sales coming out at 12%. Very surprising. It is definitely ahead of market expectations. We are, however, seeing the market not really reacting to those numbers. I think market is really looking forward to the rate announcement tomorrow before they make any decisions on the retail sector.
Well, still with the retail sector, we had Spar out with numbers this morning as well. They also looked pretty good. It's lifted its dividend quite nicely at the same time.
Yes, a very good set of results, considering that food retailers are battling high electricity costs, high employment costs, very low food inflation, and what we're seeing probably from those numbers is that they have been increasing their market share. In terms of their advertising, they have been gaining there. So very good results for SPAR.
Barlow World also out with numbers. Earnings per share, headline earnings per share for continuing operations down 65% to 126 cents. That's for the full year. We saw that share price up this morning because, of course, Barlow World had come up with a trading update, so those numbers pretty much expected.
Yes, Stephen, I think what was pleasantly surprising in those results, and we've seen the share price up today and yesterday, was that they're going to see continuing demand coming through for mining equipment. In fact, they're going to see mining equipment demand almost double in the next year. So the devil in the detail, very positive for them, and investors really liking that story. They're seeing demand, especially coming out of emerging markets, out of Russia and Africa, in terms of mining for gold, diamonds, and well as coal. And we've seen diamond production being ramped up by De Beers, so very much we can see that already supporting the Barlow World share price in terms of their expectations that they're going to see demand for mining equipment coming through.